What's good, everybody? Welcome back to the B23 Financial Academy. We hope all of our videos have found you well thus far. This will be video 2 of our Fibonacci Retracement series. In video 1, we cover the theoretical aspects of the Fibonacci Retracement and its different functions, or the different functions of the levels, rather. We explained that we have 38.6, 61.8, 50%, 23.2 or something, if I'm not mistaken. Let me just double check. All right, we have 23.6, 38.2, 50%, 61.8, 100, and 0 as we outlined in the first video. So in this video, we will focus on its application in a live charts perspective. So if you haven't watched video 1, it's imperative that you do. I don't think you'll understand this video without having watched the first video on the fib. So without any further waste of time, let's get started. I'm going to focus on this area here. The fib, or the Fibonacci retracement, goes hand in hand with market structure. I believe by now you've watched the videos on market structure in terms of how to know when a trend has changed. In an uptrend, we have higher highs and higher lows. In a downtrend, we have lower lows and lower highs. And the Fibonacci is key, or that level of knowledge is key in understanding how to properly use the fib. So for example, we have some sort of resistance area here. I think we can all agree on that. It's a resistance zone. All right, there's a resistance zone here. And I'll show you where the fib comes in. We have a resistance zone here. Prior to this, the market has been in an uptrend. It's been making higher highs, higher lows, higher highs, higher lows, higher highs. I don't think, but I might as well for the last time. We have, hold up. We have a higher high, high low, higher high, higher low, higher high, or double top. We have a higher high, double top, or resistance, or we have an M formation. We have an M formation, and then the market dropped. But here's the key: where did the change in trend occur? This is, okay, might as well just type this. This would be a higher high, higher low, higher high, higher low. Okay, why is it text? All right, higher low, higher high, higher high, double top. Double top or M formation. So where was the high low broken? Let's check. The high low was broken here. So this phenomena told us that potentially the trend is about to change, and it did. So let me show you where the fib comes in. If we missed our entry, or if you could not sell at the double top, but then price reversed and then told you that it's changing the trend, what you would do is you would plot your fib from the highest point to the lowest point, or from the highest spike to the lowest spike. So an example of this would be here. Where is the highest wick or the highest points or the highest spike? It would be this one. So you just click on your fib tool, you plot it from the highest point, and you go all the way down to the lowest point, or to where the change in trend occurred. This is where the change in trend occurred. All right, here, price broke through the higher low with body candlesticks. So that's what you would do. You start from the highest point to the lowest point, and then you wait for an entry either at 38.6, at 50%, or at 61.8. On this particular occasion, price reversed at, hold up, let me just rather do that. Price reversed at 61.8 twice. We had one reversal here, they dropped down, they went back to that same fib level, then they dropped down, and they've been dropping ever since. That's example one of how you would use the fib. Let me just clear this. We'll stick to the same charts. I'll focus here now. Let me go to H1. Excuse me. All right. We'll hold up. Let me drop down lower. All right. On the 30-minute chart, we have a lower high, lower low, lower high, so on and so forth. Lower low, lower high, no, lower high, lower low, lower high, lower low, and then we'll look for the change in trend shortly. Lower high, lower low, no, lower low, yeah. And then lower high, lower low. This time there's no double bottom. There's just one lower low. And then where did the change in trend occur? Where did the lower high get broken? It got broken here. Here. Which candlestick broke it? This one. It gave us an indication that the trend may be about to change, and it did. So if we missed an entry here for whatever reason, we would plot our fib to give us a potential re-entry or a second chance. So the same way we did on the bearish example, you click on the fib. This time you start from the lowest point up to the highest point, which would be there. And then guess what? The fib reversed at 38.2. Going back to what I said, that 38.2, whenever the market touches here, it indicates a really strong trend. And since then, as you can see, prices just moved up. I don't know how many pips. Let's see, about 1,200 pips. So that's how you would go about using the Fibonacci. It goes hand in hand with the raw market structure and with identifying a clear change in trend. Excuse me, a clear change in trend. That's the most important aspect of it. Let's see if we have, okay, let me not use this chart, it's for something else. What chart should I pick? Okay, let's try the pound CAD. All right, pound CAD. Go to daily. All right, I think it's clear to see this would be a lower low, lower high, lower low, and then the lower high or the change in trend occurred somewhere here. And then since then, price has been moving up. So that's how we would plot our fib again. It's from the lowest wick, so the lowest points, until the highest points, which would be there. All right, on this occasion, price touched 38.2 and then touched 50% as well. And then, okay, they touched here. They moved up. They formed another highest point. So you could move your fib further up, which is okay. If you do that, then you still have price at 50%, but they didn't really touch 61.8. That's just another example of how you'd go about using it. I think there's another trend happening here, so I'll go down to a lower time frame just to see something. Okay, let's see. Okay, no, it's going to be a bit confusing. Okay, here is a clearer example. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. Break of higher low occurred somewhere here. So you would use your fib from the highest point up to the lowest points once the change in trend has occurred. Price reversed at 61.8. And since then, price has dropped. So I hope you guys kind of get the idea or the concept of how we use the Fibonacci. Let me just write down a couple of notes here. The fib retracement tool must be used in conjunction with raw market structure. As we said in video 1, its function is to give us re-entries. Its function is to give us re-entries when we missed the first move. And then the key levels, as we said, are 61.8. Let me just change the color here. 61.8, 50. Hold up, what happened? 50 and 38.6. No, 38.2. Let me just verify everything. Yeah, it's 38.2. So these are the key levels in regards to the Fibonacci. And I hope I simplified how it's meant to be used. That's for video 2. In video 3, we'll discuss how to merge everything together in terms of supports and resistance, potential indicators that we did in the previous videos, and the Fibonacci, so that everything can give us potentially one systematic way of trading if you don't have a way of trading. So I'll be providing different ways you can use it in conjunction with everything else we've covered thus far. If you have any questions, feel free to contact us on the Telegram group. The link is on the bottom right corner of your screen. It's completely free. There's no strings attached. Feel free to ask any questions regarding whatever we've covered, and we will get back to you as soon as we can. Please leave a like on the video if you learned something of value. Subscribe if you're new. It's been Mr. B23 signing out.